Good afternoon, good evening, and for some of you, good morning. Those of you joining from Americas and Europe. This is India market review that we are doing only for the Indian equity markets. This is being done on Monday, 13th Feb 2023, after the markets have closed at around 5:30 p.m. India Standard Time. All right, so anybody who looking to interact, and I would love to get interactions, looking for collaborations, etc. Please do reach out. You have the contact number on the screen available to you, and I'm available on WhatsApp, Telegram, and on Signal. Right. All right. So jumping in right away into the charts and on how the Indian markets have behaved. For those of you who participated in the India market review, which we posted on our channel 2 weeks back, we did say that India was underperforming the rest of the world, and the action as far as the bullishness is concerned is actually in Europe and in Hong Kong. If any of you missed that, you are most welcome to reach out to get the link to watch the global market review that we did yesterday, right? In which we covered the major global equity indices and looked to see how the entire world was behaving. And what we mentioned and what we found out in that is that plenty of bullishness in Europe, except UK. Some amount of bullishness in actually the broad market in US, but not so much in the tech stocks, and definitely in the Hang Seng index in Hong Kong. And while India has outperformed the global indices in the last 3 to 4 months, it is now underperforming the global indices in the last 1 month, right? So while the rest of the world has actually been going up in the last 1 month, India has been going down in the last 1 to 1.5 months. And as we mentioned, that this downtrend is likely to continue for many reasons, which we will get into subsequent IMRs as we go along, and we keep doing this on a regular basis. So watch out for that. If you want to receive updates, reach out to us. You know how to do that on the WhatsApp, and we'll be happy to send you the updates as and when we are hosting. We will plan to probably do this on a very regular basis once a week, the global market review, the India market review, and other reviews on other asset classes, commodities, gold, crypto, forex, etc., on a very regular basis, globally on the global side and on the India specific side. So this is the India market review. So back to the charts, and what you see on the screen is basically the daily chart, the weekly chart, and the monthly chart of the Nifty index. And by the way, in case you're a newbie and you're all this is looking overwhelming, don't take it too hard. In the webinars in the future, we will start explaining what you're seeing on the screen. So if you're a newbie, just get the feel for it, just get the gist of it, and you'll learn. That's a promise. For those of you who know about charts, probably a lot of it is already familiar to you. So we just have a 3-pane setup showing on different time frames, right? And we have the candlestick chart with some studies that I've already done. And then we have the RSI and the MACD, pretty traditional, long-term, well understood and time-tested indicators. There are more sophisticated and other analysis that we do, including cycle studies and Elliott wave studies, etc. That's for another day, right? All right. So if we just very quickly look at the Nifty on the monthly, right? What we see most importantly and most prominently is almost more than 1 year, actually, a 15-month bearish divergence that has happened on the Nifty monthly chart, right? And this divergence is beginning to play out. You can also see the dramatic reduction in volumes that has happened. So definitely quite a bit of overboughtness, if we may use that term, on the monthly chart. And the correction that is due for this monthly chart is probably not over. And we probably have a few more weeks of maybe even a few more months of correction left in the Nifty, right? But anyhow, as we all know, these are all just probabilistic comments and analysis. The future, no one actually knows. But the indicators suggest that there is more downside left in the medium to long term. What I mean by that is the next few weeks to perhaps a few months, right? And coming to the weekly chart for the Nifty has shown that correction, and it's actually not so much. It doesn't seem to be, as far as the indicators go, there is some amount of downside left, but perhaps not that much. A little more hopeful for those of us who are permanent bulls, that things could get better. But having said that, definitely gone in a sideways zone right now, and we're looking to perhaps look at 17,430 levels as an important support level, and on the top side, definitely at 18,000. Right. The Adani saga seems to be sort of behind the markets now, really not bothered about what happens there. And coming to the uh, daily chart, right? So a complex sort of inverted head and shoulder, which if it turns out to break out, that could result in a massive upside momentum. And you never know, with Europe and US doing well, it might just pull the Indian markets up in the due course of time. But having said that, as we all know, in the Indian markets, we have the general elections coming up in 2024 and a series of state elections in India 2023. So definitely in poll mode across the country for the next 12 months almost, right? And all sorts of announcements would be made by the government. That's for sure. And some populist, some, who knows, liberalization. And while in the last few months we've seen net outflow of FPI money, right? And there are comments about overvaluations in the Indian market. We're not going to be discussing valuations in today's webinar, but we will definitely look at valuations of the Indian market in subsequent webinars, right? All right. So with this happening, we are looking at the market at 17,770 as it closed today on Monday, the 13th of um, February, right? So nothing really significant, quite range bound, you could say, between 16,800 to 18,900 for the longer term investors, traders, right? Uh, unless it really breaks out from certain levels, we're probably not going to see any significant action anywhere at this point. And on the short term basis, we're looking at 17,400. Right now, the the Nifty index, is basically squeezed between some of the long-term moving averages. What I use is the 200, 100, and 50, and also the 20 exponential moving average. And right now, stuck right in between that, some sort of consolidation that is definitely going on. And till this consolidation move actually, the market decides to move either above 18,200, 18,230, or below 17,400 on a very decisive basis, we're probably not getting any directional move till then. So more or less on the overall general market, range bound for now. And I would think that perhaps for the many weeks and months ahead, unless there's some dramatic announcement, we will get a broadly range bound market in India, right? Subject to, of course, you never know what's happening on the global side, all sorts of surprises. The year is still young, 1.5 months over, and a lot of things. Of course, one of the things to keep in mind is the US general elections, of course, which are happening next year. And then the so-called global recession is going to be a soft landing, not a soft landing. How do things pan out? We'll see. So that's about the overall Nifty. Coming to the bank Nifty per se, right? The bank Nifty definitely had a big crack, and this was on account of the Adani saga, right? There was this concern whether Indian banks were protected enough or they had been overexposed and all. And a lot of the banks took support at the 200-day moving average. That's the red line that you're doing exponential moving average, and then has tended to go back up. Having said that, it's found resistance at its old, not very old, but recent life high of the banks, which was formed in September 2022. You can see that some of us might call this a flag with the hope that it might go up. Today's candle is not so hopeful on that account. So again, just consolidation happening in the bank spaces, just like it's in the broad Nifty market. And again, stuck between the longer term moving averages. And it's going to take some time for it to decide what it probably wants to do. Given the overall setup, uh, I would just be very neutral and very cautious and not really look at any directional trading in the Nifty or on the bank Nifty. Right now, looking at the internals of the bank side, so we have the bank private Nifty private bank index, so more or less a mirror of the Nifty bank index. Basically, the largest weightage of the banks in the Nifty bank are the private sector banks, while the next one, the PSU banks, very similar, but I would say a little bit of an underperformer there. But overall, all the banks all stuck. However, there's one big difference between the private sector banks and the PSU banks on the index side. So if you look at the private sector banks, that's the chart you're seeing. The green line right on top is the life high, which is there. And there was an important life high that was made in 2019 with the private sector banks effectively broke out of in July 22 and went on to make an effective new life high. But if you look at the same chart for the PSU banks, you don't see that high that has happened. So the lifetime high for the PSU bank index is in November 2010, a good 12, 13 years ago. And right now, the PSU bank index is struggling with a 12, 13-year resistance line at 4,350. So individual PSU banks, of course, have done remarkably well, especially in the last 1 or 2 years. There was fantastic opportunities there. But right now, the overall PSU bank sector has hit a resistance, definitely not made a new life high, and this will be an interesting space to watch. Overbought for now, that's definitely what it is, and we'll have to see how this responds in the coming months. Again, I think there could be a lot of stuff from the government side on announcements, maybe populist measures, may not be. So the PSU bank space probably going to be under some sort of um, overhead, overhang, and not perhaps go up in a hurry. Right? Okay. Um, this is something I've noticed. Yeah, the PSU banks are also, technically speaking, more over bought on the monthly side than the private sector banks. Very interesting, right? So the PSU banks have had a really great run, and on the longer term, chart side, monthly side, the PSU banks are definitely far more overbought. Probably means that they're going to. We can expect a deeper correction in the PSU bank space than in the private sector bank space in the weeks and months ahead. Who knows what other interesting news and skeletons might drop out of the PSU bank. One of the things to note is that after the Adani saga, the LIC chairman made public statement saying that LIC is not looking at further investments in the Adani group as of now. Right? There could be other groups where things could be rolling out in the PSU bank space. So it'll be interesting to watch out on that. Coming to the IT index, there's been a lot of talk about IT, and you should look at the IT stocks in the US, and they've done a spectacular recovery. Some of them, in spite of the global recession fears, there's obviously been a lot of job losses and headcount cuts, which means multi-billion-dollar savings for those tech giants, which probably gets reflected in perhaps better top line in the quarters or the months ahead. But the market is definitely looking at it favorably, as it always does when costs reduce. And what we see in the Nifty IT index is basically a triple bottom which formed in June 22, in July 22, and then in September 22, and a gradual move up on the IT side, and the downtrend line effectively broken. Look, remember, you're looking at the weekly chart here, and taking a pause at this point, and almost like a tweezer stop at around 31,350, let's say. And until and unless this gets broken out, the IT space could probably be under some pressure, right? And that's the sort of tweezer stop that I put there. Not exactly a tweezer stop, but almost there. You could also call it a double top. And uh, nice thing about it is got plenty of moving average support, and on indicator basis, definitely not as overbought as it was. And there is this tentative uptrend line which has formed in the CNX IT index. So we don't have a higher top here. Would have been nice if there was one, but still a tentative uptrend in place. Maybe a cool off till about 29,500, about 1,000 point drop on the IT side in the short term. And after that, perhaps return to the bullish behavior of the IT side. So while the overall Nifty and also the bank side looking weak, the IT side not looking great strong, but definitely there is some hope on that it will perhaps offer opportunities for investing in the coming days and weeks. That's on the IT side. Looking at the auto index now, one of the things about the auto space, as we know, is there's been a number of launches last year, this year, and especially on the electric vehicle side, massive news. Of course, Tata are the leaders on the electric vehicle side, but M&M launched their XUV 400 all-electric vehicle. I think the first edition, or the first, what the special first manufactured thing, got auctioned off at some 1 crore 25 lakhs or some crazy amount like that, right? And it's heating up. The other thing, the space is heating up. And the other thing to note, as far as the auto index is concerned and the auto market is concerned, is that you have multi-week to multi-month waiting lists for quite a large number of models right now, right? Even from the basic Maruti Celerio, for a few weeks wait list, as far as my information goes, to, as we know in the public domain, it's been there about the Thar and the XUV 700 having 2-year waiting lists. And the auto companies have been, I think, raising prices almost every 3 to 4 months now. That's the sort of demand that they're experiencing. And if this continues, not if, it is definitely continuing, there is a lot of headroom left for the auto companies to make, who knows. Again, we'll look at fundamentals in some future webinar, increases in revenue, increases in EPS, etc. Right? And on that account, that's the overall very broad fundamental scenario. And if you look at it on both the weekly or the daily basis, you can see that after a rise, the CNX auto index basically between 12,300 and its life high of 13,500 for a good 6 months now, really not doing much. So a lot of the auto stocks are close to their life highs, and on a longer term view, one could even look at this as a monthly flag, which is happening, waiting for a breakout to happen. Will it happen or not? Of course, nobody knows, but definitely one sector in the market which is definitely on the stronger wicket, and we could expect further rises. And who knows, on a technical basis, is 15,000 on the cards as far as the the auto index is concerned. Obviously, you need to look at the specific stocks within the auto index. But if you're looking to put fresh money into the market, then looks like the auto space is a good place, both fundamentally, demand supply wise, and technically on the price wise, to put your money in. Metal index. So this is again the weekly chart. The metal index showing a whole amount of weakness right now, correction. So you see a double top here. April 22, the metal index made a life high and then again came back to around that level, a little bit on the higher side in Jan 23, but has not been able to really go beyond that. And even now, this correction does not seem to be over. There is probably some more correction left on the downside on the metal index. So the metal stocks probably be a little wary of that. We've had a fantastic run up, from 2020 of from 1500 to 6800, almost a four bagger on the metal space, and time for some cooling off and some rest to happen. At around, I would say maybe 5,500, just 200 points lower, 5% lower, or even around 5,000 psychological mark, there might be some excellent opportunities to get enter into the metal index again. Excuse me. So no hurry to enter into the metal, and I would even go to the extent of saying that if you are holding any metal stocks, then perhaps a good time to exit them and get re-enter them at lower levels. Moving on, talking about the FMCG space, the fast-moving consumer goods. We all know about what's happening with food inflation, massive increases in prices across the board on every commodity that you can think of. Amul, for example, increased the price of milk twice last year and again just 3 weeks back. And I'm sure if we've all noticed our coffees and our teas and our lattes, etc., have gone up by 20 to 30%, right? Easily. Obviously, the companies are are increasing the prices way more than the input costs have increased. The uh, other part of FMCG price increases, which again I'm sure we have noticed even more, is the shrinkflation that is happening. The packages are becoming smaller, the size of the biscuits are becoming smaller, and I'm sure that we've all noticed this shrinkflation on the one side combined with price inflation on the other side. So we are getting a double whammy as far as FMCG is concerned. But in an inflationary environment, food obviously one of the essentials that people, of course, will cut down on maybe chocolates and all the high-end biscuits and ice creams and all. But food is essential, and FMCG companies are one of those more recession-resistant companies that we have, sectors that we have rather, right? Pharmaceutical, education, and FMCG are the recession-resistant sectors. So one could again look at FMCG along with auto as a place to look at putting further money in. The question, however, right now is whether FMCG will come back to retest its previous high of around 42,000. So we are at 45,000 right now. So 42,000 is about a 3,000 point drop, almost a 8-9% drop in the FMCG index in the coming days and weeks, right? Looking quite possible. I think that could happen. There have been news by some of the FMCG companies of shrinking sale volumes, right, as prices have gone up. And this might bite even more in the coming days and weeks as food inflation, etc., is expected to stay relatively high in the coming months and even maybe in the coming years, right? On a separate webinar, we had talked about global inflation and regional inflation and how we may be in an era of a high inflation after being in an era of 40 years of low inflation. So who knows? It'll be interesting to see what is in store on the FMCG side. All right. So coming to pharma now, right? So pharma had a dream run, one could say. Sorry for the perhaps inappropriate use of words during COVID time, right? During COVID times, the pharma companies are the ones which raked in the moolah, right? So you can see that from a low of around 7,000, the index went to 14,000, doubling of the price of the pharma index. But after that, we've got a correction of almost about 19 to 20% that has happened on the pharma index, right? So it has broken out of a tentative downtrend line, right? Uh, and then there was a breakout that happened here, as you can see. Let me bring that, make it larger, right? There was this breakout that happened here, but however, that didn't really last. That breakout didn't really last, and we've had a return back to lower price. Having said that, it's possible that this false breakouts, as we call them in technical analysis, followed by a correction that's been going on for about 3 to 4 months. Is the correction over? Maybe. It's quite possible that it is, uh, both on the daily and the weekly side. There is some hope that pharma might bottom out maybe at around 12,000 or those levels. Not so hopeful on the monthly side, but on the daily to weekly side, yeah, there is a chance, but it's a little premature. Uh, Maybe nibbling your way into the market, but one could wait on the farmer side and look to enter maybe a 3 to 5% lower. The energy index. So this is quite fascinating because the way it's fallen, and it's quite been a dramatic fall from 26,000 to 22,000 in just the last few days. Reliance is the heavyweight, of course, in this, right? But right, 1 second. Right? So you can see that this was the fall of the Reliance stock in price, right? So Reliance trading in a pretty range-bound market from about 2,300 to 2,500, been stuck for almost 2 years now in that range and not really able to break out. Will it break out? Uh, if we are definitely at a very important support zone for Reliance Industries, which is a big heavyweight in the energy index. It's just better to wait and watch as far as that particular uh, support level goes and see what happens. It's taken support there 1, 2, 3, 4 times in the last 2 years. Will it take support here again? Let's see. A lot of negative earnings that have come through, 1, 2, 3, 4, 5. You see these red ones, 6, small ones to big ones, and there is definitely pressure on that. Now, the surprising part, in a sense, if you want to connect fundamentals, is that global crude oil prices have actually been cooling off. So the margins, etc., for all the oil PSU companies should be improving. But all said and done, we don't seem to be out of the woods. Watch Reliance for the energy index to bounce back, right? So showing quite a bit of weakness, right? However, there could be a bounce for a few percent before maybe another correction continues. And does the, again, if you look at this chart, the monthly chart, that blue line is a very significant old all-time high. If you're talking about that correction, we're talking about a 6,000 point correction on that. So that's almost a 30% correction. Who knows? I mean, crazy things have happened. When we talk about it, it looks like not possible, but it just usually you look at it many weeks, months later. Yeah, it does turn out to be quite possible, right? If you especially look at, let's say, the MACD crossover, negative crossover on the monthly chart, this is not going to get corrected anytime very soon. It's going to either this suggests that it's likely to go sideways for a long time to come, or go lower before the MACD is going to turn around and show you some longer term positional strength to come, right? So not a very hopeful place. And here's another thing. You had this downtrend line, and then it just, like, in a sense, fell off a cliff after that. And this tends to happen. The market doesn't really fall uh, just dramatically like that. And when you think that all things are over dramatically, I mean, there's this sudden unexpected fall that happens. So this is that cliff fall for again, you can see from May 22, a grinding sideways movement, and then this dramatic fall, and it breaks through that support level. Will Reliance break through its support level like this is what we'll have to watch out for, right? By the way, so if Reliance breaks that support level, then obviously the overall Nifty also get dragged down because, as we all know, Reliance Industries is a pretty big heavyweight in the Nifty. The media side, probably not probably, there's really nothing to write home about. Uh, One of the definitely underperforming indices. It made a life high in 2017, nowhere close to that, just languishing sideways. But at some support levels is what we can say, and we'll just have to wait and watch what happens. So really nothing great as far as the media space is concerned. The realty index, now, we've seen a lot of news about how real estate or rather rental prices have been shooting up across India with all this hiring boom that has happened after COVID. And here in Bangalore, definitely prices have dramatically gone up. But again, we've had the firing that has happened, and there's been news that rentals have sort of cooled off. But premium properties definitely looks like they are like selling, like, I won't say hotcakes, but they're selling nevertheless. And things are perhaps not really that bad as far as the realty index is concerned. So here's one thing to look at on the monthly chart: a really long all right, 1 decade of 2010 to 2021. Here is 10 years. So from here to here, you basically had a big, long, decade-long rounding bottom, as we call it, right? And it really took its time to move out through all the problems that the realty sector basically took on upon itself in the decades of hyper growth earlier, right? And it's taken its time, and now it seems to have really moved out of its big decade-long consolidation. There's this big sharp move that happened. This is more or less a corrective move that we are seeing on the monthly side, right? A corrective move, but it's almost from 600 to 400. So that's almost a 30% move. Perhaps more correction left all the way to 365, and then could we see another radical up move that happens on the realty side? It's very unlikely that realty is going to break down very significantly. It may come to about 350, 360, 340 on the index side, take support, and then maybe consolidate or rally up. But this is a decade-long consolidation which has broken out quite effectively, and definitely a lot of opportunities in the realty companies. In the very short term, in the very like I'm talking about the next few days, you can watch out for this to happen. So there is what we call bullish divergence, which is there in the um, realty chart. Right? Doesn't guarantee an up move, but there is some hope that you would look at and say, okay, there is a possible short-term, very short-term trading opportunity on the upside. Uh, on Friday, there was a nice green candle there, right? But today, Monday, that basically got effectively reversed. Having said that, that's probably a good entry point at around 406 on the realty side. Obviously, you have to look at individual stock charts to find individual opportunities. That is not what we are discussing in today's webinar. We are looking at the sectoral indices. Coming to the infra index. So infra, the big guy in infra is LNT, right? And I'll just put up the LNT chart in a little while. But again, infra lagging behind from 2007. So that's a good 15, 16 years that the infra space has not made new life highs. You saw that in almost every other sector. If I just put Larsen and Toubro, right? You can see that it did, make it's now making new life highs, and this is the monthly chart again. Remember that. So obviously nowhere close to doing as well as any of the other sectors, but L&T definitely showing some strength here, outperformance, but it has not been able to take the rest of the infrastructure space up with it. And if we look at what's happening in this, then we have bearish divergence on the monthly chart of L&T, right? Definitely not a very happy sign there. So in the next few weeks and months, we could actually see a correction of L&T, and maybe L&T has made a top at around 2,300. Maybe it'll rally up to 2,500 also, if for some technical reasons. But I would be very circumspect on whether L&T could go up even more once it. So this could be a good place for anyone holding L&T to look at exiting for the next few weeks or even months, let it correct, and then re-enter um, on the correction, right? Maybe to around 2000. That's about at least a 10%, 15% correction if it goes up further. So that's it. I mean, the rest of it is all, services and the broad market and okay, just let's look at this. The public sector enterprises index. Again, I'll just take a quick monthly chart view, and you can see the public sector enterprise again from 2008 peak. They have not been able to cross that level, and a very nice 15-year, 16-year sideways consolidation on the public sector enterprises. But if you look at the multinational companies, look, you can just see that they've just been trending up and trending up and trending up and trending up. So this is a very good example of where one should be focused in terms of investing your money. There's really no point in PSE, public sector enterprises. Just look at this, right? From this time onwards, 2008 to now, they have effectively not made money, right? And if you take into account inflation, if you were majorly heavy in PSE stocks, you didn't make money. You, as a matter of fact, lost money from inflationary real value perspective. But if you look at the MNC side of things, and I put the similar line at around 2007, 2008, let me put it there. You can see that the MNC index was at 4,300. Now it is at 20,000, right? 4x, 5x increase on the MNC side. So no wonder the MNCs generally tend to have premium valuations, and everybody just loves them. Of course, when I say everybody, the informed folks, right? So if you're looking at putting your money in, definitely look at what the MNC side of the market is doing. You're probably going to be much better off looking at that. A lot of MNCs are looking at growth now in India because the growth rest of the world has tapered off, and India still remains as one of the strong economic growth engines. And gradually, there's very well known thing that as China's growth sort of lags, India's growth may or may not increase substantially, but there'll be a larger proportion of global growth contributed by India rather than China. Still a long way to go. The Chinese GDP is multiples of the Indian GDP. So, but that gap will close in the decades ahead. And the MNCs are definitely looking at moving more and more manufacturing and services into India. You have things like Foxconn making Apple phones now in India at rates in numbers that they have not heard of. And of course, because of the China COVID issue, a lot of these companies looking to exit China and relocate to various other parts of the world, including India, of course. Right. You have Aero India 2023 going on right now as we speak. And there was this announcement by Airbus and I'm not sure some other companies about hiring thousands and thousands of new engineers, etc., for the development centers and research centers, all based in India, many of them in Bangalore, right? So that tells you about the MNC space. That's what one should look into. So I think the takeaway for today's webinar is basically you don't want to look at the overall market. There's more weakness than bullishness or speaking in a nutshell. And where one should be looking at are MNC, right? Oops, what happened? Is MNC, the auto space, and IT space could be coming out of a bottom, right? So the IT space, the auto space, and the MNC space for sure, and perhaps the realty space are the places to look at for your funds for the coming weeks and months, right? So with that, we come to the end of today's webinar on the India market review. We'll be having, we already had the global market review yesterday on 12th of Feb. It's up and available for those who want to view it. We will be doing market reviews on other asset classes, which would be commodities, gold, crude oil, natural gas, um, and some industrial metals. And then we'll also be looking at global interest rates plus cryptos, right? And these will all be separate webinars that we will be producing on a very, very consistent and regular basis going forward. If you have any, interest in getting updates about that, then you know how to get in touch with us. The contact information is on the screen. You can also go to the, for now, very not very well designed YouTube channel, Bangalore Investors Club, right? So you could have a look at that, and just look at Google for Bangalore Investors Club on YouTube, and we are uploading our content there right now, right? So with that, thank you for watching, and I look forward to your feedback and making connections anywhere in the world for various purposes. Thank you, and have a great week ahead.